Hey guys, welcome back to the channel. Today we're talking about the biggest mistakes that I made as a beginner or new investor. I made some pretty big clangers when I was new to investing, and that is something that I want to warn you guys about. Do not do any of these things that I'm going to show you in this video today. That will set you on the track to becoming a very successful investor. If you just take forward from this all of these and apply them to your own investing, you're on the road to success. Without further ado, please smash that like button, consider subscribing to my channel, join me in there and we'll have a look at this. Hey guys, welcome to this new investor, beginner investor mistakes. So firstly, I had an emergency fund that was too small. I had a couple of unexpected bills that came up and it completely cleared out my emergency fund and left me with nothing in savings in the middle of a stock market crash. I ended up having to pay for another unexpected bill on a credit card because I had no spare cash, and the alternative would have been selling my investments or some of my investments at rock bottom prices during the middle of the stock market crash. So that is something that you really want to avoid. You want an emergency fund that covers 1, 2, 3 months expenses or anything that you could perceive will come up. Factor that in and have that held in cash, always readily available. I'm now fully recovered from this. My stocks have recovered. The credit card bill is long since paid off, so I'm all good. But that is just a fantastic word of warning for you there. The next thing that I struggled with is I had no clear strategy. I couldn't tell if I wanted to be a dividend investor, both dividend growth or dividend income, or if I wanted to be a growth investor. And my portfolio, originally with Freetrade, essentially became a mixy blob of them both, and there was no real definitive strategy to it. So to sort this out, I decided to split them in two. So I had my growth portfolio with Trading 212 and the blockchain pie that I've got in there, and the high risk penny stocks are all held in that place, and then dividend growth and dividend income investing is all held with Freetrade. So I drew a line down the middle, and now I'm focused on, I have two strategies. I'm focused on maximum growth on the one side in terms of dividend and in terms of dividend growth and a little bit of capital growth, and then in the other one solely based on growth, trying to get to that £100,000 as quick as physically possible and then onwards from there. My next one, and this is a common one, lots of investors will have had this one, is I yield chased and got trapped. So this is a prime example, guys, of what not to do. I found a company that was Occidental Petroleum and it had a 10% return, and I thought, absolutely excellent, 10% return, I'll have my money back in no time. And I received approximately 1 or 2 dividends at this 10% return, and then a couple of months later, oil crisis, lots of oil dumped onto the global market, then the global pandemic, the dividend disappeared down to a 0.1% dividend yield, and the stock price tanked through the floor. I had to sit on this one and hold. I was patient. I didn't panic sell. I could have, and I know that many people did. I held, I bided my time and averaged down little bit by little bit, and then I got out. As the oil price recovered, the share price recovered a little bit, and I'd managed to average down just enough to sell just below break even. I got very lucky with this one. In the future, you guys might not, so that is something to massively consider. I've also been guilty in my initial days of following the crowd. I didn't do enough research and I ambled along and sort of followed what other people were talking about and what other people were invested in. This isn't as bad with value stocks and dividend paying stocks because they do tend to hold their value. If somebody's talking about investing in Coca-Cola, Coca-Cola's a great company and it's going to stay around and it won't cost you too bad. But this can be potentially catastrophic with growth stocks and penny stocks that are quite volatile. If you follow the crowd in and it ends up being a pump and dump, you can easily get your fingers burnt and lose an awful lot of money. Another one is trusting YouTube investor channels. That may seem odd considering I'm a YouTube investor myself and like to show what I've got, but You learn the hard way. What is right for somebody else on YouTube may not be right for you, and they're only likely to show you the winners. They're not likely to show you their losers. So YouTube is fantastic. It's great for information. It's great for stock ideas, but you need to do your own due diligence and your own research, guys. I found out the hard way as to why not to do that with Carnival Cruises. I bought in after the first dip in the pandemic on the recommendations of multiple YouTubers, and then it tanked even further and I ended up bag holding that one for quite a while. Again, I managed to get myself out of it without taking a loss, but it took time, patience and courage to hold. Another one is being overly reliant on Motely Fool and other clickbait articles that are available on their websites. So I overread paying attention to Motely Fool, Seeking Alpha, Simply Wall Street and Market Watch, and though there are some fantastic pieces of information available on these websites, there's also an awful lot of people just looking for views and clicks, and they're making articles that are just simply exaggerated or plainly not true in some cases. This is quite a big one, and it's a little bit one that's probably not heavily covered, and that is the fact that I over diversified when I was new to investing. I was so frightened of getting it wrong that I bought myself into way too many stocks. At one stage I had 58 positions on the go. I might as well have bought an SP500 ETF with that many positions. Since then I've reduced down to 31 positions, and that is a lot more manageable for me. This is completely subjective, to be fair, because you might be happier with that many positions. Some people might argue with me that you only need 15 positions. Essentially it's better not to spread yourself out too thin, because you will not get the gains that you would otherwise expect, and you won't realise those gains, especially if your budget is quite limited. So do bear that in mind. That is a classic mistake to make too. I also feared a stock market crash. That is a big mistake that a lot of new investors and beginner investors make. I feared seeing my investments in the red big time, especially with dividend stocks. This is actually one of the best opportunities to buy value companies because they're down just in the wider market, so you can essentially gain that money, and it's a fantastic buying opportunity. Historically, the stock market has recovered from every single market crash there has ever been, given time, patience and holding your nerve. Lastly, I sold a winner and bought a loser. This was a classic error by me. I made 55% on cat stock and should have held it, to be fair. I love this company. I've got back in now and I'm 60% up again, so I've done reasonably well. But at the time I sold, I thought I was clever and thought I would move the money into Boeing that was on its small dip from a 737 MAX crisis, and it was down at $320 from $370. So I thought that I'd make myself a little cheeky return. Then the crisis got worse and the global pandemic tanked the Boeing share price to $95 a share. Fortunately, I did not panic sell. I averaged down and bought a few extra shares near the $100 mark, and that brought my position down, so eventually I could sell for actually a small profit in the end, which I was very pleased with. But that is something to bear in mind. Don't sell your winners to pay for some losers. Be very careful when you do that research. If you do not make the beginner investing mistakes that I made in this video, then you can certainly get yourself fast tracked to becoming a successful investor. Pay attention to these, do not do them, implement your own strategy, and you're well on your road to success. Hopefully this video has brought you some value today, guys. If you could smash that like button on your way out and consider subscribing to my channel, that'd be awesome. I'll see you in another investing episode. Catch you later.